Imagine you wanting to buy a stock at 75 naira, only to discover that you have bought the stock for 82 naira or much more. No, you were not scammed. It's just that you made the wrong order price. Perhaps you have placed the market order, not the limit order. And this has frustrated so many beginners. And that is why we are here today to teach you, to show you the difference between limit order and market order. Join me. You are welcome. It is Wealth Portfolio Builder. Here we teach you how to make wealth, how to manage wealth, how to multiply wealth. Follow me, we will show you how to overcome this challenge. Great to have you. You are welcome back. Today we are looking at limit order versus market order. The mistake costing traders good money. It is costing traders. It has cost me money, especially beginners. And we want you to learn, and you decide why you go for market order against limit order, or why you want to go for limit order against market order. There are pros and cons, so you decide which one you are going for. Now, what is market order? Market order simply means, in a relatable form, you go into the market and you tell them, give me XYZ product at any better or best available price on the stock market. Immediately you click, it goes. Maybe you had intention behind you 17 naira, and by the time the order is executed, it is at 72 naira because it is market order. Boom, your order is filled. You're now buying for 72 naira, or sometimes even much more than that. Well, that is your stock for you. So you have it, at least you have your order. But the thing about market order is that three basic things. One, speed. That is the key thing about market order. Speed. You don't waste time. Two, it saves you time. You don't just gallivant on the Nigerian Stock Exchange trying to negotiate prices. Then also access, liquidity, especially if you're going for those ones that have good volume. So speed, access, time is enabled when you go through market. But there is a major fault, and that is what we call spillover. That difference, that thing that you bought for 75 naira or 72 naira instead of 17 naira, if you had waited or you had gone through market, you may have gotten it less than that, perhaps even at 68 naira or 67 naira. That difference, that 5 naira difference, is called spillage. And over time, it may come to haunt you. But that can be equally be corrected if you are for the long run, and that is when you use the dollar cost average. But today we are not for dollar cost average. We are looking at limit order versus market order. So now that we have discovered limit order, market order, let us also look at limit order. So what is limit order? Limit order is totally different from market order. Limit order is like you saying, I am willing to buy Dangote, I am willing to buy MTN, but at my own price, at my own term. The difference between limit order and market order is one of them is control. You have control of what you buy. You are not under emotion. You are not under the fear of missing out. So that is the major thing about limit order. It's like you saying, I want to buy, but I want to buy at my own price. Here are some of the other benefits of limit order. One of them, you are in control of your entry and your exit. So you determine when you go in, you determine when you come out. Another one, you prevent overpaying. It prevents you, it saves you from overpaying, something that you can buy for less, why buy for more. Another thing is that gives you better value for volume, because you are buying with a less amount, you can acquire more volume. But somebody who went to buy at a higher price will only end up getting a lesser value, and it helps you to buy whatever you want. You are in control. You are not forced, you are not coerced into buying anything that you want. This is one of the major benefits of buying limits. And of course, in the long run, why that person is trying to catch up, the person that bought 5 naira more than you, while he or she is trying to catch up, if both of you still follow the same principle of buying as soon as money enters your account, you will discover that you always be head ahead of him because you already have a differential of 5 naira. And if both of you keep buying, no matter the dollar cost average, it will work in his own side, and at the same time, it will also work on your own side. So this is the benefit of limit order. So same applies when you come to selling. There is limit order for sale and there is market order for sale. As I've earlier said during the buy, you want to buy. The disadvantage with limit is that it takes time. You may decide that you want to buy a product for 120 naira, but currently it is being sold for 125 naira, and you are believing that it will come down to 120. Of course, you can even, the period is up to, I think, 30 days, so you can place an order for 30 days duration, waiting, hoping that it will come down. But the disadvantage that it may not come down, and after that, it will expire. You will need to reorder again, hopefully waiting. But another disadvantage about that it takes time is that stock that you are hoping that it may come down may never come down again, especially for quality stocks of high volume that is being traded. It may keep ascending and ascending and ascending to the extent that you may not be able to achieve the quantity you want again. You may need to use much more money to acquire that. So that is its own pitfall. Anything that has to do with limit order. So it is up to you to decide what actually you want, because every one of them have their own disadvantage. As we have earlier said, you decide what you want, limit order or market order. And if you also want to sell, perhaps you go to the market on that particular day, you see that the highest bid means the amount that somebody wants to buy. The highest bid, for example, is 800 naira, but you want to sell. You go to the lowest, perhaps lowest offer. You see that it is maybe 900 or 850. You can say, okay, I am moving my own to 810 so that you can accommodate it, and perhaps you are in need of money, and instantly your order will be filled. You take your money and you dash them. But if you don't need the money so urgently, you can move with the crowd, hopefully believing that at this particular point, the amount that you desire will be what you will get. So whether limit order or market order, it is up to you and what is necessarily on the ground for you at that point in time. Don't follow others to jump into the market to buy, and don't just wait, because that opportunity may not come again. If today's training has added value, we want to believe it has. We want you to do one thing for us. We want you to like, we want to hear you, we want your comments, and we want you to share, and we want you to subscribe. It is Wealth Portfolio Builder. Here we teach you everything that has to do with the stock market, the real estate, and the area of cashback, and every investment that brings money legitimately to our pocket. So we are here believing that you have learned. Keep showing up. You never know when we'll come up with quality trainings that will blow your mind. God bless you. See you at the top. Remain at the top. Bye.